I was watching CNBC earlier today, and they were talking about consumer confidence. And when you're investing money, when you're starting to kind of, so I was watching CNBC today, and they were going over consumer confidence, and they were talking about consumer confidence is down. It's important to know that because if you take a look at the election, the stock market, the Fed raising the interest rates, the housing market is extremely slowed down. Massive antitrust lawsuits against like Apple, not Microsoft, but what was the other one? It's one of the other companies. There's a lot of antitrust, or what is really considered to be that they have a monopoly on their industry, especially Apple. That's like the biggest one, right? They were doing that, going after Meta and a bunch of stuff, and Amazon. Like you can kind of tell the government itself is striking out at big business, saying, "Hey, you're messing it up for the little guy. You're limiting opportunities. You're not giving everybody a chance." That's the narrative. That's what they tell people in the media. But realistically, right now, AI is the big dog. Everyone's tracking AI. So AI is where all money is going. So technically, it's technology. So, and they also did something just recently that says that the non-compete agreement with an employee, between an employee and an employer, not with their CEOs and their upper executive level, but their lower level people or their staff, they can they can now do something that causes like they don't need a non-compete. They can't do a non-compete. They just deem that illegal. That has long been the way of how businesses run. So let's say you come and work for a company like mine's Bell Capital. We have sensitive data. We have a lot of information. We have investors' names, numbers. We have proprietary software that we use. We have proprietary information that we use to just underwrite deals. We have third-party verification, all of this stuff. So now that those people can go to any organization afterwards and they can get stolen. You can offer them more money, they can leave, and you can't stop them from going and creating an existing competing business outside of working with you now. That's gone. Usually before, non-compete was like 2 years and you can get started. Now they're taking it away. So here's my thought on that. Consumer confidence is down. Government's meddling with big business, and that's where they get all their money from and their taxes from is big business anyways, right? They're breaking it up, I think, because of this. If technology is where all the money is going, there's a lot of jobs that are being created through this technology field between AI, ChatGPT, a lot of other companies, NVIDIA, all of these people. So as you pull apart their staff and their companies and say antitrust issues, even if they don't win, just for the sake of being pulled into court, it gets noticed. Now the government has an opportunity to say, hey, you know what? These people are going to start a business. They can come and work for us. These companies can now do this. They can do this. Like, it's going to be dismantled, but in a sense where it works against the everyday investor who's looking to invest money. So I brought all that up to say, if you're thinking about investing money, investing your hard-earned money so you can actually either plan for retirement or you can continue to scale or grow. Investing in the stock market right now, like if you take a look, like for me, I'm always like real estate, multifamily real estate is what I'm talking about for you guys watching this here. Multifamily real estate to me is the number one best and better asset class for you to put your money into, for you to move money out of the banks, to take your money from just being paper money, fiat money, not backed by anything, and move it into a real asset. So if you were to compare your real estate to the stock market, right now, the stock market is going up, is going down. You can't time the stock market. You don't want to time your future, your generational wealth, the things that you're going to do with your family, your wife and your kids and your grandkids, or your charities that you're going to support with playing the stock market Wall Street casino game. That's crazy for you to do that. So if you're going to put your money in there, yes, there's going to be gains, but even within those gains, you're going to be taxed as you pull your money out or you move those gains over into something else. Even to just move them and buy more stocks, you're still going to hit the tax button. The tax man cometh. So that's one, that there's a massive influx in playing that game. Wall Street is more like the stock market. Wall Street is more like the casino, right? The stock market. So that's number one. And putting it up against cash flowing institutional great assets and investing your money into that, there's no ebb and flows in that. People pay their rent every month, and then they pay their rent every month, and then they pay their rent every month. Like, there's a stability into that. So to compare the investing your money into, and I'm talking about business level real estate. I'm not talking about mom and pops, 10 units, 5 units, things like that. Doesn't even compare. Real estate, hands down, beats the stock market. And next, even if you're going to invest it into businesses, if you take a look at what's going on in business right now with inflation, cost of goods are going up, cost of insurance is going up, salaries for employees, even some lower level employees have gone up. Just to be able to maintain and operate your business has gone up. And because insurance has gone up, that if you're in a physical location like we are, your lease is going to go up over time because you have CAMs, common area and maintenance, all of these other things. That's not including just marketing. That's not including materials. That's not including online stuff that you have to stay in touch with. All of those things. So even though you may invest money into the business or a business, whether you're acquiring a business or you're investing in your own business, you are not guaranteed to do that. You may invest, let's say you invest $100,000 in your business or $1 million in your business. Yes, you may make money in there, but you're still pushing on it. That's not a passive investment. That's not a investing investment where that money multiplies for you. There still takes a lot of work. And only 9% of all businesses in the US make over $1 million a year revenue. So if that's the case, then why would you bet or gamble on investing money into another business or into your own business sometimes when you can go into something rock solid and proven like larger multifamily real estate, right? Next, cash. Just like cash, if you're going to take a look, like real estate's a better investment than just regular cash. Do you know right now I'm 50 years old, and since I've been born, the dollar itself has went down 86%. The dollar's lost 80%, 86% of its buying power. That's crazy. And just from 2020, the dollar's lost 40%, I think it was. 40%, yeah, that's what it was. Lost 40% of its buying power just from 2020. So that means worse, like if you had $1 million, you've lost 40% of what that $1 million could have bought you. But had you invested that $1 million into a multifamily property, that wouldn't have lost that value because multifamily property based on its rents keeps up with inflation. Because rents over the last 40 years, 4 decades, has consistently gone up about 9%, right? Since 1945 in this country, rents have gone up since World War II. So just the cash alone, your cash is losing value every day, right? Your dollar buys you 40%, at least for my lifetime. And I guarantee you in your lifetime, the dollar is going to lose 90% because they're going to continue to print more money. I promise you they're going to print more money probably within the next 2 years, right? Gold, silver. Gold and silver, yes, people still say, yeah, invest in gold, invest in silver because it's real. But no one's trading gold and silver anymore. Nobody's going to the store and say, hey, here's a gold bar. Can I take this bread? No one's really doing that. So when you think about a better investment, a better place to take your money out of the banks and store it in a place, you're not going to go and buy gold and silver, even though Rich Dad Poor Dad says go buy gold and silver. I mean, no one's playing that game anymore, man. It's a dead game. All right, houses. I mean, it goes right back to another form of real estate. A lot of people say, hey, should I invest my money in houses? Investing money in houses is different from investing money, taking your money, buying a house to flip it, buying a house to sell it. It doesn't matter, even other kind of real estates. Like, I personally think a house is a bad investment if you're going to live in, right? Because you're only going to have one tenant, whether it's you or somebody else. If they move out, you're 100% vacant. You're not making any money. Even if it stays vacant all year, I mean, even if it stays occupied all year, you're still, you can't keep up with inflation with the house. Like, it just doesn't have enough scale or enough doors. So as an investment per se, and you're hoping that the neighbors' properties and the properties in your area all go up in value, they may not. Think about it. Right now, there's that massive lawsuit settlement that just happened with the National Realtor Board, whatever. It's like NRA or NIA. That is massive because that is going to cause a disruption in the way houses are sold. They're thinking that that settlement is going to raise the value of properties based on removing a commission from a buyer, from a buyer's agent. But that's not the case. That 6% has always been baked into the value of all assets. That actually kept the economy moving. So as an investment per se, buying a house and hoping that it goes up in value, terrible investment. Yes, they do go up, but do you want to wait that long? Because an investment is an investment because one, it pays you. Two, you can hold on to it and keep it long term. Not everybody can hold on to a house. Take a look at 2008. A lot of people lost out. And last but not least, retirement accounts and 401ks. Your retirement account just basically says, hey, put this amount of money away, whether it's pre-tax or after tax. And then when you retire, that money, you get to draw off of it. Hoping and praying that one, your expenses have not went up. Taxes are going to go up because you're going to get hit with a tax bill. as you take those withdrawals out, even if you prepaid the taxes, it may push you up into a new income bracket because now you may have your retirement, and now you have this new income, and that income may bump you up into a new bracket. So now you may hit a new tax bracket, and you're going to be penalized for that. Because I can promise you, if you are 60, 10 years from now, and you can take it out, you still need to be alive. You don't need a lump sum of money out of your retirement account. You need cash flow. And do you think that if you live to be 80 or 90, which is the way most people are living now, and you're 60, that taxes aren't going to continue to rise on you over the next 20, 30 years while you're still trying to function? And I can promise somewhere around 60, 70 years old, you're going to be like, man, I want to travel more. I want to spend more time doing other things. And if you're a business owner, you're going to be like, dude, I want to keep pushing, but I want to make sure to set things up. And your retirement is not going to help you do that. The retirement accounts, IRAs, 401ks, is a product of Wall Street and business and bankers. It is not a retirement product set up for the other people. That goal is to lock your money up forever. They keep trading it. You don't know what it's in. It goes up and down. They tell you you're getting this return, but when you pull back and you see that you're not really getting that based on the fees, they just keep that money locked up. That's for Wall Street to use your money as long as they can, and then gift it back to you and tax you for it at the worst thing. So if you were to take that same, let's say you had $1 million in a retirement account, you moved it over to a piece of real estate, right? That was cash flowing 5% a year. You got 5% a year on your money forever, or however you were in that deal, let's say 10 years. You get almost 50% of your money back, and you would also get, so that's the cash flow piece. And then let's say we had an increase of 3% a year. Now 3% a year over 10 years, let's just say another 30%. Really, it's more than that because it compounds on top of the 3%. Like it's not just a flat 3. Right? That's that piece that you would get back in cash flow over and above the other initial 5% that you were getting. And then when we turn around and sell the property, which is what we do for our investors at Bell Capital, then you would take a piece of the upside. And we wouldn't sell unless we're going to do a double or a triple on your money anyways. And that money will go back to you. That's a better retirement account. Or we refinance, which we've done, and pay our investors back, keep them in the deal, and they keep getting cash flow. Now they have no money in the deal, so we de-risk them. And you can roll that principal, it's never lose your principal, into another deal. And if you're getting 5% off the first amount, now you're getting about $5,000 a month or whatever you're getting, and you buy a second property with that first principal, that's the leapfrog principle. It's a leapfrog strategy that a lot of wealthy people know about and do, but most people don't because they're trying to debate, where do I put my money? So I feel like real estate as an investment vehicle is a way better vehicle than stocks, bonds, Wall Street, investing in businesses, other businesses, not your own, and or your own business. I would say investing money that you have parked is better to invest that money in a real estate piece than to go back into your own business. Keep making money in your business, right? Take what you have and roll it. It's better than cash because inflation is eating away at cash. They will print more money. I guarantee that. They've always done that. The buying power of your dollar has gone down. It's gone down 86% in my lifetime, and it's going to continue to go down as they continue to print more money. They're going to do that. It's better than gold and silver, period. I don't even know what you're going to use your gold and silver to buy for. It's better than investing that money into a house in hopes that the value goes up. Yeah, you can do that, but that's work too. And also for any retirement accounts. It's just real estate checks all the boxes. Cash flow, appreciation, tax benefits. It's hard to disrupt. It's got good leverage. It's got scale. If you invest in a multifamily asset, it's got 100, 200, 300 units under one address, as opposed to one tenant, one property, one roof. It's just not even the same thing. It doesn't even scratch the surface. It's an inflation hedge. It's protected against inflation because of the income and the rents that continue to go up, as well as all the insurances. You can hire professional people to go through to manage the asset. It is top notch as it relates to investments are concerned. So if you're thinking about investing, especially if you're watching what's going on out there in the marketplace right now, if you watch CNBC, you're watching the financial markets, you're watching the capital markets, with all that doubt, right? Like they call it, consumer confidence, but technically it's doubt. People are losing faith in the government, in the stock market, in our economy, and the money, what's going to happen. So people pull their money out, they move them into alternative assets, which is why I think real estate for all of you guys is going to be a better way to go, whether you do it with me, at Bell Capital, or you go and do it by yourself. It doesn't matter. The investment being a better investment for you to put your money, to store money, to take the money that you've earned, you've made, and you park it into a place where it can multiply for you, that's always going to be a better choice for you. And then it takes away the guesswork as it relates to your investing. You don't have to worry about what's going on with the market so much, because you know, like clockwork, you're going to be getting money every month because you invested in an asset that produces income. That's the purpose. All right, so if you have questions on this, let us know. If you want to talk to me or someone on my team, go to bell-capital.com. You can schedule a call there. If you go to the website, there's only two things you can do there. You can schedule a call, or you can hit the button that says get started, and you can register your account. That's free. You can see what opportunities are open right now with us. We want to help. We want to have you. We want to talk to you. We're here to answer your questions. We're built for that. So I hope that helps you guys. And I'm looking forward to talking to you. Like this video, share this video, comment on this video. Really want to help anybody. And I want to make more information that answers you guys' questions. And I can't do that unless I hear from you. All right. So you guys rock out. Have a great day today. And focus on your wealth. Super important. Make it your duty.